Welcome back to Converge. It's the end of May. Hard to believe it. We're getting close to the middle of the year. Alanna, good to have you back. How you doing today?
I'm doing well. How you doing?
I'm fine. Yeah, coming off a few months of leave, sort of trying to scrape up as much news in fintech as I can find and make sense of it all. And there is a lot to digest. So I thought today we would just sort of break down some of the most interesting things happening in the space. Obviously, we've talked a ton with great guests about stablecoins and AI and embedded finance. I kind of want to talk about, more of that, but go into sort of the broader idea of, the speed isn't really a luxury anymore. I mean, it's survival at this point. We've got new payment rails that really have changed the outlook for cross-border payments and payments in general. I want to ask you, Alanna, stable coins are getting so much attention from big banks now, like JP Morgan and Citi, who recently came out saying that they're going to develop some sort of stablecoin solution, cross-bank, interbank. And this is in response to, of course, fintech disruptors like Stripe making acquisitions and starting stablecoin rails on their own side. So why are traditional institutions now suddenly so into stablecoins?
That's a good question. I mean, let's think. Short answer, payment rails, right? Traditional banking infrastructure, think Swift and PIC or card networks. It's
Yeah.
slow, right? It's expensive. Um, Stable coins, especially USD backed ones, right? Like USDC or JPM coin, offer near interest, right? Low cost settlements. So, you know, JPM coin is already processing billions daily on Onyx. Citi is piloting tokenized deposits. The industry is shifting broadly and, kind of concurrently. Circle, Ripple, Coinbase are all potentially consolidating to dominate this space and make payments, borderless, right? That's kind of the tagline.
Yeah, well, it looks like Circle is actually going to go forward with their IPO, but yeah, there was certainly
Right.
some murmurs
Right.
about that.
It's like kind of off topic, but we thought this was going to be the year of IPOs, and now come to
Yeah,
find out it's the year of strategic investments and acquisitions.
right. I know. It's
And I
wild.
think that speaks to the speed, right, that you
Yeah,
mentioned.
yeah,
Being able to kind of scale up and strategically partner.
yeah,
So
yeah. And it's not just about consumer payments, of course. I mean, as I mentioned, cross-border payments where we sit, the the use cases are becoming more and more apparent every day, like what Visa did with the Bridge acquisition. Sorry, what Visa is doing with Stripe's Bridge platform, rather. Stripe acquired Bridge. And in Latin America, they're making waves with, the possibilities there. And I think that's where this technology can get really sticky for cross-border. So, do you have any thoughts on that sort of angle on it?
yeah, I mean, kind of being in the technology partnerships function in as my remit, right, in this space, a lot of historical purpose-built modular infrastructures like Convera, Corpay, things like that, built up over time, really had speed to market, right? Extensible reach. You could kind of plug and play compliance. And we did play in a lot of miners, exotics, and all of that. With this, kind of partnership where they're leveraging, Bridge's stablecoin or orchestration platform. It kind of gives Currency Cloud, right, Visa's
Uh-huh.
acquisition, direct access to LATAM that they historically hadn't had.
Uh-huh.
And
Uh-huh.
so again, double clicking on that, speed to market and then
Yeah.
speed of settlement, speed of the payment.
Yeah. So we also wanted to talk about that Brex report, right? You shared it with
Yes.
me.
Yes.
Tell me
Yeah.
about your thoughts there.
So, it was funny because I think they had originally put out a report, months ago, maybe 6 months or something, don't quote me on the exact timing.
Yeah, it was
And
about a
with
month
all
ago, I think. Yeah.
Yeah, and then with all of the stablecoin legislation motion here in the US, they kinda went back out and,
Mm.
kind of resurveyed, and
Oh,
this
gotcha.
new survey, right? This new survey came back with really different pain points that,
And what was the name and the theme of the survey? Was it a CFO
Yes, yes.
tracker?
Yep, yep. So it was all finance leaders, primarily, executive bench, folks that are, heading up finance and treasury, and basically reacting to economic shocks. What is it going to take to continuously operate an international business, if you will? And it was funny because the original litmus was a little bit different than the most recent, kind of backwards audit that they did, and the market is moving, right? And this study kinda shows it. We could talk about some of those points.
Yeah, I mean, what stood out to me was the speed of pivots these days. I mean, they emphasize the need to be pivoting quickly in order to keep track with the inevitable pace of change. And I think they surveyed what 500 finance execs, and then
Yeah,
followed
something
up after April's tariff shakeup. And there was optimism around growth, IPOs, and M&A, but that dropped nearly 20 points from the original survey. And instead of panic, sort of the reaction was a swift reprioritization. Leaders sort of paused, refocused on risk management, and doubled down on these adaptable strategies that will help be more malleable in times like this. So it's kind of like the CFO playbook has permanently shifted from forecasting to being agile, if that makes
Yeah.
sense.
Yeah, well, it makes complete sense because typically you plan, a year forward, like, and then near term and then even longer term. But because of all the market shifts and the volatility and the technology, evolution, um, it's almost this, pause, right, for analysis paralysis where you're like, "Where's the market gonna go?"
Yeah,
Everything is moving so fast that it maybe doesn't even make logical sense to execute on the extensive planning that has been done,
exactly.
right?
Yep. Fascinating. Of course, part of that sort of breakthrough in technology that's speeding things up, of course, if not the majority of it, is driven by AI.
Mm.
Um, we both read Simon Taylor. We love the guy. He's been a guest on this show. He had some great predictions at the top of the year. And he said that AI is really reshaping everything from payment operations to sourcing logistics. And we've started to see that play out. Well, in your view, what does that mean in practice? Like, what are you seeing on the ground? Because you're on the ground with everybody talking about this stuff.
Yeah. Well, really, AI is going much deeper than just automation. The agentic, kind of flows now, these AI agents can execute almost end-to-end payment cycles. So think about like a small textile business, for example. They need to negotiate supplier terms, source products, and then handle payments, ideally cross border, right? Because a lot of this, kind of wholesale and distribution life cycle in these procure to pay platforms that they live in, are all deeply ingrained in cross border. But essentially, what these AI agents do is that autonomously they can do all of those steps, negotiate the supplier terms, source the products, and handle the end to end payments functionality, right? And so what they're kind of doing, right? MasterCard is backing it with virtual corporate card tokens for secure transactions. Um, but on the flip side, I mean, adoption isn't completely frictionless, right? There's
Yep.
PCI compliance, there's all sorts of different stuff. And, PCI framework has dramatically changed, in fact, this year. So people were future facing for that. But 94, right? Something around that percent of finance leaders are prioritizing now these AI skills from a depth standpoint. But almost, 75, something close to that percent report major challenges, especially around, return on investment, right? What is the total cost of ownership?
Yep.
CapEx, OpEx, all of that. So you don't just get to flip a switch, right?
Yeah.
And then we just run everything, on
Wouldn't that be
blockchain
nice?
and it's all
Yeah.
compliant and it works.
Yeah. So it's really not, it's not just about tech. It's a whole mindset shift for finance teams and leaders. And I mean, it's not, we're talking about speed, but that speed, as much as it is, not the whole game, it's not a nice to have anymore. It's a must have. It's the baseline. I would say that the 3-day, settlement periods are now instant. 24/7 payment processing is the norm, or at least becoming more of the norm. And if your capital or data moves slowly, you're really irrelevant at this point. So embedded payments and modular infrastructures are refactoring how finance operates entirely. Speed sort of equals cost savings, early invoice payments unlock liquidity, automated workflows reduce fraud, and you cut that cost of doing business down substantially.
Mm.
I mean, is that sort of where we are at now?
Yeah, I mean, it's one, these AI agents and these, enhanced future-facing payment flows don't build themselves, right? So there's talent out there that needs to be sourced to actually build these, net new motions, but it's really pushing, finance teams to consolidate on the tech stack. Um, you know, it's before it was how many different partners, right? What can we put into beta?
Yep.
What can we litmus and A/B tests? And now it's about, I think, deeper, much more strategic alignment and, frankly, just hedging a bet. And then,
Yeah.
the train's leaving the station, right? You're either on
It
it or you're
really
not.
is. It has left. So really, yeah, the complexity is becoming a real tax on growth. Um, the fintech ecosystem is moving away from, as you said, broad vendor rosters to that sort of fewer, deeper partner model. Since you're in partnerships and you're talking to folks every day about how to build out effective ecosystems, what's driving that move towards the fewer, deeper partnership models?
Well, speed to market, right? It's always about speed to market. It's about leveraging purpose-built solutions. And, so for example, we're in the cross-border space. Wise is a big player in our space as well. But originally, Wise was a P2P payments platform,
Uh-huh.
right?
Uh-huh.
It was proprietary P2P tech.
Yep.
And so then you build a suite of APIs and you're running on, kind of this consortium model. But at the end of the day, it doesn't singularly solve just a B2B business use case, right?
Yep.
And so as nuances come up and Wise even expands to, being able to offer downstream customers, virtual IBANs or holding accounts and stuff, they're partnering with banks strategically so that they can do yield bearing, right? Because people still want, the ability to deposits are everything related to banks or otherwise. And so, if you can get some yield on it, you're gonna try to get yield. And so what a lot of companies are doing is, it's speed to market and it's leveraging those existing solutions that really just are plug and play from a compliance perspective, and it's delivering, kind of competitive advantage simultaneously with feature parity that other incumbents may have very, very quickly.
I
MasterCard, for example, they had a very, I think, strategic investment with Corpay,
That's right. Yep.
and there's a lot of exclusivity in there, right? It's about, like, the fleet vehicle stack and, MasterCard sees card business at the end of that, and, while we don't know for sure how much of their total revenue was, fleet management product, I think broadly we know a lot of it is that line of business, right?
Sure.
And these strategic double downs and investments, um, allow to kind of expand infrastructure in a compliant and kind of modular way.
Yeah.
And it makes sense, right? Kind of for both businesses potentially. But it writes in exclusivity where Corpay really can't use, Visa products now.
Right. Right.
So
It's big. Um, I guess let's close things out with how is fintech investment evolving? I mean, and we have seen this move to quality over quantity. Deal volume is down, but average deal size is up, and investors are backing fewer startups, but there's bigger checks out there, which favors the resilience and the real business value over what they call blitz scaling. It's the same story with stablecoins, of course. There's consolidation, as we talked about earlier, potential consolidation there. I'm sure there's going to be more. And VCs want proof of that operational efficiency and not just the
mm,
slick pitch deck. How do you react to this?
yeah, well, coming from a lot of VC,
I know
backed
that's where you
valley
came from.
companies in
Hmm.
my career, it was about top line, like net new logos at all costs, right? There was no kind of profitability models behind it. It was just about hypergrowth and hyperscale.
Uh-huh.
Now it's a lot different. The lens has shifted where, if you were a public company and you're making these strategic investments, EBITDA is an important thing, right? And so I think that is driving a lot of, the market motion now where if you're not profitable, right? If your balance sheets don't look good, then you're not a silver bullet, right? And that brings us back to those purpose-built solutions that are filling a business need that allows partner to expand in geo, offering, and be regulatory compliant, and security first, you know. So it's that kind of, light switch that you can turn on through a strategic partnership, but it needs to make fiscal sense.
So, last topic, since I mean, I could talk about this stuff all day long with you, Alana, but let's try to close things out on the topic of fintech investing because it's changed a lot. I would say now there's a big emphasis on quality over quantity. The deal volume is down, but the average deal size is up. Investors are backing fewer startups, but there's some bigger checks out there. Those checks are favoring that resilience and the real business value over the sort of blitz scaling of the past. Same story in stablecoins. Consolidation is happening. VCs, of course, want proof of that operational efficiency and not just that slick pitch deck. What are you seeing? Because you're out there pitching solutions. What are you seeing on the landscape right now? Is that the truth? And is it the end of growth at all costs?
Yeah, I mean, it's the end of growth at all costs. Welcome to the profitability era, right? But in all seriousness, the landscape has changed. Before it was fintechs, like top line growth, net new logo at all costs. And the expansion was the attractive thing, and VCs would throw money at it. But today, because it's, much deeper technical integrations and these strategic um, alliances, when you're investing in fintech, essentially fintech is either going to solve a real business problem or solve a real consumer problem. And to be
Yeah.
able to edge out, right, any competitors in the market, you need to have something that's like a laser fit. It has to be a silver bullet. But the investors want
Yeah.
profitability. A lot of these strategic investments, and not just from VCs, right? Some are from public companies. They care
Right.
about
Right.
EBITDA, right? They care about
Right.
profitability. And I think historically there's been a lot of investments, frankly, that just didn't pan out, right? Just like acquisitions that became
Mm-hmm.
DBAs that magically disappeared. And those days are
Mm-hmm.
gone, you know?
Mm-hmm. Mm-hmm. They sure are. Well, yeah, good place to wrap it up. We've covered the stablecoin wars. We've covered agile CFOs and the Brex report, which is a great read, highly recommended. AI infused finance and that speed imperative. Any final thoughts, Alana, before we say bye for
Yeah.
now?
Yeah, and, maybe we'll post it and post the link to the CFO Brex update, which is a really good
Yep, for
one.
sure.
And then, yeah, I mean, just the fintech landscape, it's getting leaner and smarter and faster,
Indeed.
and everything is gonna be purpose built. So, if you're not evolving with it, really, you're kind of out, right? I keep using the train leaving the station analogy, but it really is. You're either on it or you're not.
There's a reason a lot of luminaries are throwing that term around because it really is the state of affairs right now.
It is.
And I think banks are realizing it, FIs have realized, and fintechs are leading the charge. So it's a really exciting time to be witnessing it all.
Yeah,
Also, don't forget to check out our Payments Pulse report. I'll drop the link in the show notes as well. Alana, it was great chatting with you. We'll see each other in a couple weeks.
sounds good. As always. Bye-bye.
Bye.